Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor online at stevesaretsky.com. Welcome back to the show, Steve.
Thanks for having me on.
Steve, what's your latest take on the Metro Vancouver housing market?
Just kind of going through a bit of I would say cooling off. I mean, obviously we're coming off with record volumes all time. So, March of 2021 here was the strongest month ever on record. So, when you're going, 100 miles an hour and you hit the brakes and you decelerate, it certainly looks like a significant cooling off. But, when you look at the numbers, you peel them back, the sales are still very strong. But we are definitely, certainly in hindsight, it feels like, okay, we probably peaked out there in March and, we're coming off of that, what I would say was a pretty insane bull market, over the last 12 months.
Does the real estate market look like it may have put in a major top or at least an interim top earlier this year?
Yeah, I would say like an interim top for sure. I think we'll go through a consolidation phase here for a little bit. I think there's some vulnerabilities, particularly say for suburban houses, that went up 35% over the last 12 months that, was certainly exhibiting a lot of froth. I think that, I wouldn't be surprised to see prices pull back in that segment, say over the next 6 to 12 months. But, as it stands right now, where inventory levels are still very low, it's still a competitive market, suburban single family homes, under $2 million, you're still like 2 months of supply for sale. So it's still a very tight market, but, I think as that inventory, in my opinion, will probably start to replenish and grow sort of each month here moving forward and should bring some easing for buyers.
Have a significant number of people acquired investment properties, and if they did, is that usually the sign of a market top?
Not really. This market's predominantly been driven by end users during a pandemic wanting more space, and that's kind of what we're seeing. So obviously the majority of the housing market has been led by the single family housing market, followed by, townhouses, particularly 3-bedroom townhouses. So really that's just an end user driven market. We haven't seen a whole ton of investor based activity. Again, the reality is like there's just not a whole lot of investors that are actively going out there and buying $2 million single family houses and renting them out for $4,000 per month. The numbers just don't really work. So yeah, what we're seeing is a end user driven market.
We're hearing more and more people want to become realtors. Is this a trend that tends to happen at the top of a market?
Yeah, it's certainly signs that I would say are a little bit concerning. You have certainly almost like a brain drain that continues to funnel into the real estate segment, as it continues to eat up a larger and larger portion of GDP. Particularly when you see record job layoffs at the onset of the pandemic, people that are losing their jobs, looking around, going through career changes, they look around and say, it's a hot housing market. Maybe I'll become a realtor or a mortgage broker or a home builder or whatever. And so we've seen more and more of that shift, into that segment. And obviously, again, it just obviously creates, I think, larger risks down the road, because if you do get a real estate correction, you just have more people that will ultimately be impacted by, a slowdown in that segment.
Have 2021 real estate prices exceeded the prices from the boom of 2016 in Vancouver?
Oh yeah, definitely. I don't have the data in front of me, but yeah, we saw a record price acceleration as well. So, prices are higher across the board. Unless you're looking for a $5 million house on the west side of Vancouver or the British properties, prices are higher across the board.
Are properties still selling for over asking, and are you getting major bidding wars?
Yeah, we're still seeing a lot of that. I mean, obviously, the bidding wars are cooling off as months of inventory builds off a record low base. So, I mean, I don't have I think the number of single-family houses, for example, the percentage of them that sold above the asking price, I think it was around 50% in the month of May. So again, basically 1 in 2 homes is going above the asking price. So again, it's a very competitive market still, but it is coming off of, I would say, a crazy market back in March, and clearly, unsustainable price growth when you have 30% price run-ups. I mean, that can't be sustained for very long. And so we are, in my opinion, everything that we're seeing, we are coming off of that.
Have HELOCs and reverse mortgages helped to fuel this real estate boom?
No, not at all. Actually, HELOC balances have actually stagnated. So it's kind of interesting to see that you've got very strong mortgage growth, mortgage credit growth. So basically what that tells us is that mortgage originations are actually running very, very high. But HELOC growth has actually been muted. And what you've actually seen across the Canadian credit spectrum is that there's been a consolidation of higher interest debt. So people paying off credit cards, lines of credit, consolidating that debt basically into their house essentially. And so you've actually seen a contraction in those segments of the credit spectrum.
During the COVID time period, have people been taking on more personal and mortgage debt?
Well, we've seen mortgage debt and mortgage balances grow, for sure. I think a lot of that is a function of people getting into the housing market, upsizing. So we have seen mortgage debt grow. And like I said, mortgage debt growing, yet, other consumer credit growth contracting, credit card balances. And like I said, so there's a consolidation, which is ultimately better, I think, in the long run, because if you've got mortgage debt, if you're borrowing that at 2%, it's probably a lot better than borrowing it on your credit card at 20%. So, I think net, that's a positive.
Now, some people, of course, look at a mortgage as, that's a huge debt that you have. And other people look at it as not debt, but really an enforced savings plan, because if you pay off your mortgage, you still have the equity in your home that hasn't been destroyed at all, and in many cases has increased over the period that you've owned the home. So what's your view? Is it really mortgage debt, or are you investing for the future?
Well, I mean, there's different trains of thoughts, right? We certainly, can't sit here and try to justify, someone to go and try to take on $1 million mortgage and over leverage himself. I think that, everybody has to be sort of, taking on what they can handle. And I certainly think that, Canadian debt loads are something to be concerned about, because, the larger household debt that you have, particularly as a percentage of GDP, it does create financial risks if there is a downturn in the economy that is sustained. But however, that being said, you can't just look at it all in one picture. The reality is, with mortgage rates where they are, 60% of your initial payment from day one is going into a principal pay down. That is essentially a savings. So 60% now. I've got clients that are borrowing variable rate mortgages at 1.3% today. That equates to basically 70% of your mortgage payment is going directly towards principal. So that is a pretty impressive savings vehicle for a lot of people. And so I think it's important to sort of contextualize that. I think that we had some stats here that we were going through more recently, where just looking at mortgage debt, for example. So at the end of a 5-year mortgage term, homeowners in the 1980s, for example, paid off just 3.8% of their outstanding mortgage. At today's interest rates, homeowners are paying 16.2% of their mortgage in the first 5 years. So, the power of low interest rates, it ultimately rewards the debtors in this example, and again, also obviously punishes the savers, because, hey, listen, if you don't have any debt and you're just parking your money in a checking account or a savings account at the bank, chances are you're earning, 0.5% at best. So, That just, unfortunately, it's just the reality of the situation, and it's certainly, it goes counterintuitive to what everybody's taught sort of in school or from your parents growing up. What's the notion? The notion is save your money, pay down debt. Don't go into debt, save your money. Well, I mean, that's a terrible strategy in an environment of negative interest rates.
Renting versus owning. I've always taken the attitude when you rent and you leave that particular property, you don't get any money back. And as long as you've built up some equity, even if the overall price of your home has fallen, at least if you leave your house, say after 5 years, you get some money back. Do I have the right attitude, do you think? Does that make me a target for real estate agents?
I think there's different trains of thoughts. And obviously, like in Canada, we're certainly incentivized by the government to invest in primary, residence, because it is a tax-free gain. And obviously, especially at today's rates that we talk about, right, you're paying down a significant portion of that is going directly to equity. So it's beneficial from that standpoint. However, I mean, I don't necessarily disagree. I don't necessarily agree that, renting is also a bad option either. I mean, it just depends on what you're doing with that capital. So for example, if, I look at it and say, okay, if you want to buy a house in the west side of Vancouver, for example, you're probably looking at, let's just call it $3 million. So, what does that down payment look like? You're probably putting down, let's say, $800,000, and your mortgage payment's going to be, I don't know, $8,000 a month. Well, the reality is, to be honest, you could probably rent those houses today for $5,000 a month. So, there's arguably some savings there, but the only thing is, what are you doing with that $800,000 down payment that you would have used? Are you putting it into the markets? Are you earning a return on it, or are you going out and spending it on cars and boats? So, I think that it's all relative. I don't think there's like a right or wrong solution. I think that there's certainly a lot of people that can generate and build wealth by renting, but I think that most people don't have the financial discipline, I suppose, where they actually are investing that money that they are using in a principal residence.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, as Canada reopens, is inventory returning to so-called normal?
Way off from normal. I mean, that's for sure. But, we are building again off a record low base. So we have 2 months of inventory pretty much across the market. Certainly not you want to get around 3.5, 4 months of supply until you get to balance. So we got a long way to go here. I think that we have to make that very clear. The market is cooling, but we've got a long way to go to get to, balanced inventory level.
Could mortgage rates spike higher if lenders become concerned about risk?
I'm not really too concerned about that. I think the lenders are, being aided by the central bank and the federal government, and there seems to be sort of a risk-on appetite right now. And, we've just reintroduced, a beefed up a little bit of a mortgage stress test here, but, everything that I'm seeing from the banks, it's kind of full steam ahead.
If you wanted to avoid the stress test, do you get an uninsured mortgage, say from a private lender or from the bank of mom and dad?
Yeah, I mean, there's different trains of thought on that. Not necessarily trains of thought, but I mean, it just depends on your situation. So you can't really get around the mortgage stress test going through traditional financing, right? If you're getting, money, a gift from mom and dad, it all sort of shows up in your qualification process. So, obviously there are ways to get around the stress test and the fact that, you can go through the private lending channel, which, doesn't go through any banking channel. So, you're going to be paying a much higher interest rate. You're probably looking at about 5% today on a first mortgage interest only. So, Certainly not the route that most people are opting to go.
Are foreign owners currently buying, selling, or holding?
I would say fairly balanced. I mean, I wouldn't say there's a whole lot of foreign activity in general in the market right now. Obviously, borders pretty much being closed and everybody's sort of hunkering down, in their own countries right now. This market right now is being driven by, human emotional needs. Again, everybody's lives changing during the pandemic. So that's kind of what we're seeing, is we're not really seeing a whole lot of foreign activity. This is much different than the 2016 housing market.
People have been buying high-end homes during this boom. Where are they getting their money from?
There's a lot of people that have built up significant equity in the housing market, right? I mean, that's the unfortunate reality. It is what it is. You can, agree with it, disagree with it, but most people that are, trading in the housing market here have already been in the market for quite some time. And it's the same sort of thing, everybody. I understand that there's, and I'm certainly one of them too, where I look at it and say, wow, if you look at the debt to income ratios, or the house price to income ratio in Vancouver, people go, wow, that's, not a very affordable housing market, price to income. But the reality is nobody here is buying, these houses on income. Most people have built up significant, positions, in the housing market already, so they're leveraging that existing equity. You have a humongous amount of intergenerational wealth transfers. So basically parents that have been on the housing ladder that, have accrued $1 million, $2 million in home equity, that are basically, utilizing that to help their kids get into the housing market. So it's not like their kids are, making hundreds and hundreds of thousands of dollars to get into the market. No, what you're seeing is their down payments are essentially being gifted. And that's helping. So, it's sort of, I think it's important to contextualize that when people look at like debt to incomes and trying to sort of understand the housing market. BC, the British Columbia housing market, BC bring cash. People that, are wealthy here and own these, $3-4 million houses. They don't necessarily earn their incomes here.
The last significant bear market for Vancouver real estate was the early 80s, when inflation was soaring along with interest rates. Are we starting to see comparisons between the 80s and today's booming real estate market?
Different trains of thought on that. I know that everybody is obviously looking at this as an inflation scare. And, certainly governments, central banks are sort of quote unquote printing a lot of money. But I still look at it and think we're really facing, deflationary backdrops still, right? I mean, the debt levels haven't changed. The demographics certainly haven't changed, and technology, and all three of those are deflationary. So we basically have, government printing money, trying to sort of offset this deflation. And so I don't know. We'll have to see if this inflation is transitory, or if it is going to be here to stay. But I still think that you have a deflationary backdrop with governments printing aggressively, and that's why you're seeing obviously the bulk of the inflation showing up in asset prices.
If money laundering is a significant part of the boom in Vancouver real estate and a spotlight continues to be shone on it, are we likely to see those properties hitting the market?
No, I don't think so. I don't think government actually is going to do anything meaningful. I think that government continues to talk about housing and housing affordability and money laundering, but the reality is the way the system is set up, it's there's just nothing. I'm not optimistic that a whole lot is going to change. I think that most of it's talk, and again, governments have had, a decade plus to deal with the housing file, and nothing's been done. So, I think it's mostly talk. I think it's a system that is too large and it's too hard to correct.
Agenda 2030, the Great Reset, continues to be pushed around the world, where you will own nothing and apparently be happy about it. Could this push affect the psychology of the real estate market?
I don't really know what the context of the question is there, but I think that, I do think home ownership rates have peaked. I think that we will continue to see, more and more of the younger generation renting. Again, not necessarily by choice, but that's just what it is. I mean, I think we've kind of gone down this path of, trying to sort of keep asset prices inflated to sort of, create a wealth effect that ultimately spurs, spending and job growth. And obviously at the expense of that is certainly the younger generation, which, can't access, housing. So I think that, you'll continue to see an increase in the rental market. I think you'll continue to see more construction of purpose-built rentals. And, that's certainly what we're seeing. I mean, purpose-built rentals in Canada are at record highs.
If the real estate market sees a significant drop in prices, are investment properties the first ones to hit the market?
I think rationally that would make sense. Obviously people need a place to live, so you're probably not selling your primary residence. Like I said, I think that you tend to see other debt get consolidated first. And so the last thing to go would be people, obviously, not paying their primary residence mortgage.
If the real estate market was to drop, would the Canadian economy drop with it?
Well, yeah, it's 50, I think, Q1 of this year, I think residential investment alone was over 50% of GDP growth. So, housing basically is the economy, and that's why housing ultimately has a Fed put, right? I think every politician in power here is well aware that housing plays a major component of the Canadian economy. That, ultimately that's why they're so afraid of housing prices obviously coming off, and that, any sign of weakness, policymakers are stepping in to try to support it. And that's certainly what we saw, at the onset of the pandemic was, policymakers very fearful that house prices would come down. So what did they do, right? Mortgage deferrals for anyone that asked. We started mailing checks to every household that asked. And that playbook will be repeated. If anybody thinks that, in the next crisis or the next downturn that we won't go back to another form of mortgage deferrals, I think that you're mistaken. I think that you're naive. I think that if you look at the program, it didn't, pausing your mortgage didn't cost the banks anything. It didn't cost the federal government anything. So, by all accounts, it's been a successful program. And it will be brought back. Again, you can disagree with the semantics of it and the moral hazard of it, but that's just the reality. The system is the system.
With politicians talking about wealth taxes, are people with money considering selling their real estate and leaving Canada?
Nobody that I talk to, but, it's certainly possible if the government continues to increase taxation. I think that, people will look for safe haven, but I'm not seeing any of that.
Originally, the lockdowns looked bearish for real estate, but they ended up being very bullish. What happened? I think that, again, emotional needs, came through. We, again, saw massive government support where, disposable income in Canada actually increased, household savings increased, household net worth increased, right? So, everything that people were looking for to, stir a massive correction in housing, myself included, never transpired because government transfers directly to households actually, dwarfed lost income. So they actually overcompensated for the shock in incomes, right? So we basically essentially printed money and handed it to households, and that's obviously what kept the housing market going, and obviously now we're on our way to a recovery right now, and government's sort of slowly trying to wind back some of these programs. Is one of the reasons why home prices went up is the fact that there weren't a lot of properties being foreclosed during this mortgage moratorium? Yeah,
obviously, and I think that was the whole point of the program, right? It's just to alleviate some of the debt burdens on households that are obviously under some stress, and like I said, by and large, the program's been a success. Mortgage deferrals. The mortgage deferral cliff that everybody's worried about has basically morphed into a nothing burger. It's a non-event, and most, I think 98% or 99% now have fully resumed payments. So, like I said, the program whether you agree with it or disagree with it, just on a moral hazard basis, the program, what it was intended to do, was a success.
Between bullish and bearish on the housing market, which way are you leaning right now?
I mean, I've been bullish for probably 7 or 8 months now. I've been telling people that, basically as of August, you could see, right? I mean, if the Bank of Canada is, when they came out and said, listen, we're going to print $5 billion of QE per week, and everybody's going to get 6-month mortgage deferrals, and you look at the housing data and you see inventory collapse to record lows and home prices beginning to accelerate, it was, to stick to your original thesis of like falling house prices, I think again was naive. You have to look at the data, and again, when central banks come out and say, listen, we're going to print as much as we need to sort of support markets, I mean, I think that you have to change your view. And so, that's been my view for well over 6 months now. And, Canadian home prices on a national level have accelerated to their fastest pace ever. And, like I said, I think right now we're going through a cooling and a consolidation phase. Do I think that there's some vulnerabilities in the market? Yeah, those vulnerabilities haven't necessarily disappeared. But by all intents and purposes, I mean, a lot of this just depends on, I don't see central banks, willingly removing stimulus, in the next year or two. I mean, I think that central banks, while they're trying to slowly drain some of the liquidity, I mean, there's so much money sloshing around that, what's going to be the catalyst here for a correction in housing? We had record unemployment. We dodged through that. We've had multiple stress tests. We've gotten through that. So, I'm curious, what is the catalyst here moving forward? And the only catalyst I can think of is obviously inflation and bond yields, pushing up significantly higher, and mortgage rates obviously going from 2% to 3.5%. Then you're going to have a correction in the housing market. But, until we see that, I think it's a green light.
What's the best way for people to get a hold of you?
Best way is by email. Steve at stevesaretsky.com or on Twitter at Steve Saretsky.
Steve, thank you so much for being on the show.
Thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. As you heard, the best way to get a hold of him is his email, steve at stevesaretsky.com, or on Twitter at Steve Saretsky. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com, and we'll ask those questions for you. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.